Good evening, this is Alex, Chief Strategic Officer at ECLUBTRADING Limited. Thank you so much for joining us tonight. Please have a look at our disclaimer. You can find it at the bottom of our YouTube page, or you can go straight to our website, eclubtrading.com. We have the new website ready for you guys. I hope you are enjoying our new graphics and the products that we offer. We encourage you to subscribe either to our paid products or to our free lifetime products. Thank you so much for joining us on Instagram as well. Thank you so much for your nice comments about the new website. We are very happy about it and we hope you can make the most out of it. So today we talked in the daily charts and in the morning game plan about an oversold bounce. It happened in a very long time. I'm just going to go over the chart here. The last time we have been below the 100-day moving average was all the way in November of last year. So this was a big level for the SPICE. We managed yesterday to regroup and close above it. Today we had an inside day. There were times that you could make money short or long, depending on your positioning and depending on your timing, but you had to be really a surgeon in order to make any good money today, because it was a difficult, choppy, sideways market. So all in all, we had an inside day. We had a bit of a bounce. We had this gap up, which was sold. The bears rejected price once we went inside the channel. We are inside the gap. We are trying to fill this gap, but we got rejected and we closed below yesterday's high. So all in all, an inside day. Why did we have an inside day in the SPICE? Tomorrow, as you well know, we have the Fed meeting, which is very important for the rest of the year, for the complexion of this market. We're going to find out if Mr. Powell will announce interest rate hikes or tapering, and the timeline for that depending on the market conditions, depending on the employment and on the US economy. If the report is very dovish, and COVID is still part of this report, and they're still talking about unemployment and so on, then we can expect a rally from here in the equities. If the Fed is hawkish, and we're going to talk about more this in the morning game plan in the daily charts, you can expect this low for 28.86 to be broken in the next few sessions, because there are lots of headwinds with increased taxes, with tapering and so on. And the bears, if we break below this, if this is not the low of the week, then we can expect a bigger correction, a bigger move down, and you have to be prepared for this. You have to be very tactical in this period, because you are below the 8 and 21 day, which is always shows you momentum. And when you are below the 8 and 21 day, you are either very tactical and you try some day trades, or you are out of the way, or if you are a good short, this is the time when you make money, and there are not a lot of times during bull markets like we have experienced in the past years. So be very careful out there, be tactical, don't take too many things overnight, see what worked, see what didn't work today, and remember that tomorrow, 2 hours before the close, we're going to have the statement from Mr. Powell, and this will be a decider for the next period. I don't expect any real changes in his tone. Probably it's going to be in line with what the analysts expect. Probably we're going to have a bit of volatility tomorrow, so do not trust either a gap up or a gap down. Look for the levels for 28.86, this week's low so far, and today's low for 33.07 in the SPICE. This should be important and ample support for now. Now let's quickly look over the cues. These are the tech sector. We did not manage to get inside the gap like it happened with the SPICE. We are still below the gap. 364.99 is the low for today. 368.81 is the high for today, and inside day for the Qs for the tech sector. We are still below the 8 and 21 days, so no real momentum here. A bit of a gap up, which was subsequently sold, so the bears are still in control. We are here in no man's land between the 50-day and the 100-day, so it will all depend on the reaction to the Fed's decision tomorrow night, 2 hours before the close. So keep that in mind if you want to take any stocks long. Know your levels, know the gaps that they need to fill, and know the support from yesterday's lows. Now let's quickly look at Apple. Inside day for Apple, tried to push above yesterday's high. It did not manage to do that. 142.78 is the low for today. 144.60 is your pivot resistance for tomorrow. We're just above the 100-day. Again, in no man's land here. We need to reclaim some important levels, and the next big important levels are around 146. So first of all, it has to get above 144.60, then 144.84 in order to get to the moving averages. It's better to be out of the way, better wait for some clear direction after the Fed meeting, see if we reclaim some of these levels, and then you can be either long or short Apple depending on the outcome. AMD, this stock featured in our morning game plan. I hope some of you managed to follow that. I hope some of you made some money in AMD. It wasn't the easiest of trades. It went red, green, kind of chaotic throughout the day, so I'm not blaming you if you didn't make some money, but overall our thesis was correct. AMD, this doji type candle signified a temporary bottom, so AMD gapped up, 101.18 was the low, 103.41 it managed to push above this 102.51, which was the high from yesterday. It went inside this gap, it almost filled the gap to 103.41. The next big resistance is 103.71. So if you want to be in some tech stocks overnight, AMD is definitely one candidate. It's not the easiest of trades out there. It's an adult swim only type of thing.
Chinese board and possible bailout.
Guys, we had this issue with Evergrande. I mean, this is just a scapegoat for now. We knew about Evergrande for 2 weeks now, and usually the market reacts before that. This is just a confluence of events. We have, of course, all the regulation that's going on in China. We have this big problem with Evergrande, but it's not going to be Lehman Brothers all over again. We're not going to fall apart because one Chinese property developer is going to go bankrupt. The state will probably intervene and save them like they did in the past. I don't believe this is the biggest headwind for the market here. We knew that September is going to be a volatile month. We had a huge rally in the SPICE and the Qs so far this year. We've been up 18%, and on average the market is up 7 to 8% per year. So definitely a correction is healthy. It depends how long it's going to be the correction. Usually they're very short and very abrupt, so this is why you need to be careful. We're going to see what happens with Evergrande as well. Keep it on your radar, but the Fed is tomorrow's most important thing.
Andrej supports his argument by saying that it still represents 3% of the Chinese GDP.
Yes, that's correct as well. But we trade the US markets. Obviously, there are a lot of companies, and you can see some weakness in the companies that are related to the Chinese market, in the Chinese names listed in the US markets, but this is due also to regulation. There's some weakness in Apple, which produces most of their iPhones in China and so on, and it's a huge market and it's very important market, but I don't believe that at the core of their values the Chinese government has any interest in letting such big companies going bankrupt and actually disrupting their impressive growth that they had in the past. Worried about it, you can have some SPICE puts, some Q puts, or you can be long gold or silver. Those are always great hedges against black swan events if we're gonna get a really Lehman Brothers type of event soon. If not, use tight stops, day trade more, see when we try to reclaim some of these levels, see if we get below the weekly levels. Let's quickly go now to their new device. It's called Portal. Bit of competition to Zoom, in my opinion. I just looked over some of the reviews. Not something special. Why would you actually carry a different device? Mr. Zuckerberg. 519 the low, 360 the high. Did not manage to get inside the gap. Facebook has been the strongest FANG type name, and when you see Facebook below the 8, 21 and 50 day, there's something definitely wrong with tech at the moment. We're in a correction phase here, not actually correction phase, but in a sideways downtrend market. So we're gonna see how it goes from here, but not a lot of enthusiasm for the big tech stocks, so I wouldn't be long a lot here. If you want to try it, if you are a long-term investor, definitely you can buy some dips to average out your cost, but make sure that if we break below 349.88, we still have some capital left, and you can buy even lower, because if Facebook, for example, breaks this level, it's going to break the 100-day, and the next big support level is around the 200-day, which is all the way down to 321. So keep that in mind before committing too much capital, because even though you are right in your thesis, the market has a way of leaving you without capital until it shows you that you were right. Now let's quickly go over Microsoft, similar to all the charts in tech. 294.07 the low, 297.54 the high. Nothing special for Microsoft. It shows some relative strength early in the morning. It got sold, did not manage to get above yesterday's high. Still in this downtrend channel. Microsoft again, look at this beautiful trend above the 8 and 21 day, this 8 and 21 day, and then here the trend broke, and we tried here to